it's a real pleasure to be here. I've been coming off and on for 3 years and getting to know everyone here. And I'm a huge fan of what they've been doing with their legislative frameworks. So I was more than happy to come down and show my support and also agree to moderating the panel. Our topic today was DeFi, cross-border payments and crypto banking, which is a hugely wide topic, we decided. So we're going to focus primarily on liquidity in DeFi and the use of stable coins in the ecosystem, as well as obviously the need for cross-chain bridges. So I think probably we'll just crack on with introductions. I'm James Bowater. I founded CryptoAM with London City AM newspaper. I'm the founder and editor at large, which means I don't have to write so much anymore, which is great. I'm also involved in various other projects, including World Mobile and MELD, which is in itself a DeFi banking protocol. So that's all quite exciting and happening at the moment. So I'd like to ask everyone on the panel to introduce themselves. I know you've had a quick rendition from Pete, but over to you, Samu.
Hi everyone. Well, thank you. My name is Samuel Jimenez. I'm the founder of BeGlobal.finance, which is a new BSC DeFi. And I think the panel today is quite appropriate actually for these kind of things. So I'm just going to pass it on and we get into the topic quickly.
My name's Ismail Malik. I'm the founder of Blockchain Lab. Got a short introduction. We've been specializing in smart contracts just prior to the Ethereum launch, mostly currently developing back-end smart contracts for DeFi applications.
Hello everyone, my name is Mikko Ohtamaa. I'm the CEO of TradingStrategy.ai. We are the first protocol that does quantitative finance and algorithm trading on-chain.
Okay, so I think the answer is let's just kick off. I'm going to hand over the mic to Samu, so why don't we start on the topic in general in terms of the liquidity need within DeFi. So let me just hand it over.
Yes, basically so far we're very used to centralized exchanges and we talk about DeFi. However, we don't realize how important liquidity is because if we don't have lots of people or institutions in DeFi, we cannot actually run it. But once we have it, we can move everything from centralized exchanges to DeFi, and it's been increasing a lot recently. We were talking with Mikko before. Now DeFi is about 25% of market share, and it was just booming like for the last year and a half, more or less. So it's increasing very fast, and actually seeing things like China breaking down or at least blocking access to centralized exchanges and so on, it's even pushing it farther. So DeFi is a new thing, but actually it's already working and it's evolving quite fast in this sense.
Yeah, so can you hear me fine? Yeah, it might be like, so I'll concur with that. DeFi has already had compound growth year on year and it's accelerating extraordinarily. And I think if it grows any faster, we start to put systemic risk where a lot of untested protocols will have, inevitably large hacks, off-chain or on-chain smart contract vulnerabilities, and that will damage the ecosystem. So I think we're growing fast, we're growing rapid. You're going to see the rise of stable coins, as you've already seen, but adoption in stable coins. So where you're seeing the on-ramp from PayPal into USDC, you're likely to see a bridge from that into DeFi. And then the most exciting thing, which everyone has been waiting for in DeFi, where you're seeing cross-chain liquidity aggregation. And then you can have sizable and mature products where institutional DeFi will start to see a sizable market.
Yeah, so as I don't sure if there's somebody who doesn't know here, DeFi means decentralized finance. So it basically means that you can do trades on chain and it's permissionless, so you don't need to have a middleman to clear your trades. And of course this is not going to revolutionize the cryptocurrency trading, but the trading as general, because you have a freedom to invest and freedom to trade that a lot of people in the world today don't have. And as we mentioned earlier, like China, they now tried to block cryptocurrencies and centralized exchanges, and now everybody's coming to DeFi, and it has to be the future because as long as you have free internet access and freedom of information, and you have cryptocurrencies, you can't stop people to invest, and they will come. So there's a desperate market for people to come to DeFi.
But kill that one. I mean, I think what's interesting about the discussion, and I think Joey Garcia and Sean from Greengage were quite eloquent on the subject. I mean, the need for sort of protection and regulation is ever present, isn't it? And I think that there have been some announcements, I mean, from the Fed about looking at stable coins. I know that Jeremy Allaire from Circle is going to be giving testimony and all that kind of stuff. So I mean, the regulatory requirements, I mean, it's sort of almost the antithesis to decentralized anything, isn't it? But I think everyone understands that, you know, some sort of hybrid model is required. Otherwise, you know, it drives everything underground. I mean, where would you like to talk about? I mean, would you like to talk about the regulatory side of things?
Well, definitely, it's a topic that's hot right now because everyone jumped in, but there's no regulation. So it's going to crack down in the end. Countries are going to go after this, and there is something that must be done. But it's growing a lot, as Ismail was saying, but it's not mature. We still need more development in this sense. There are a few things to be done, like regulation. How do we comply with different countries, and we don't expose the investors and so on. Also, from a security point of view, it's a big issue now because there are many teams that are just launching, forking, and it's full of problems in the code, etc. So this is one of the challenges we have right now. It's regulation, security, and so on. So it's DeFi is something here that's working, but it needs more time. I think it still needs more time to get where it will be in the future. To be an actual product that people use, I think we need to wait from 2 to 5 years at least. So we go through these problems already, fix them, and then basically we have a good platform.
Yeah, so in terms of the regulatory framework, we need to sort of, like you said, the hybrid model, but the on-ramp, right, is going to be stable coins. It's going to be crypto, but if you're going to see the global mass adoption, it will be on-ramp from stable coins. And stable coins do need to be regulated, right, because you are claiming a reserve or a basket or an asset or a collateralization on something. If there's not regulation there, you know, you can have a major systemic risk in the entire sort of DeFi ecosystem. So I think there's going to be fairly heavy regulation, deep insights, committees, you know, all sorts of regulatory, and I think that's a maturing of the industry and really, really healthy, right? On the other end, regulating smart contracts is a minefield. I think regulators have to really go light. I think the next year what we need is a real sort of education of regulators globally on how to draw insights, how to audit smart contracts, and then regulation. I fear regulation prior to the sort of, I think there needs to be like regulators in the early sort of, from about 2007 to 15 had a lot of capacity building in fintech. I think there needs to be a massive capacity building around smart contract auditing from regulators prior to any regulation.
Yeah, I personally believe that the code is the law, and I think regulators will never get DeFi. They even can't regulate the largest centralized Bitcoins exchange in the world, Binance. They don't know where it is based, so it's way too early for them even to think about DeFi.
I mean, one of the things that I think that probably might work, I mean, I don't know how you feel, but I mean, with digital identity, and I think that Sean mentioned whitelisting, or was it Joey? I can't remember. It was in that panel, wasn't it? But you know, maybe I mean, if it can start from, you know, verifying a digital identity that gives you your basic entry point, you know, that might be a good way of doing it. And I think the other sort of quite clever idea seems to be the idea of insuring up to a certain level stable coins. So like I think $250,000 was a number that's been spun out lately. I mean, do you think that's helpful? Sort of just, you know, I mean, do you think that we need to volunteer to the regulators these sorts of ideas that are actually workable?
It's definitely something interesting to talk about because you can regulate everything or you can regulate the entry and the exit point. So if you regulate the entry and exit point, it's much more simple. The problem is there are many middle points that it's very difficult to go through because yeah, there's an entry, there's an exit, but you can always step in the middle. You don't have to go from one side. So you can mine a coin, so you have a new coin that hasn't gone through the process. So it's actually pretty complicated to do this, but it's getting slowly there. For instance, with bridges, before, well, not that long ago, like half a year ago, you had to go to a centralized exchange, go from one network to another, and then you can go to the next DeFi. However, now there are many bridges coming up, so you can just, from Ethereum, go to Phantom or to other networks using these bridges. So you're removing the middle points, making it easier in the process. I don't know what's the final endpoint or where it's going to go, but at least it's getting smoother, which is a step forward towards that.
So I like to see regulators start to sort of aggressively push forward sandboxes specifically for DeFi, stable coins, and all the bridges in between. I think there's a big situation where regulators have sort of boxed crypto and DeFi into fintech. Great, but there is so much more to DeFi. It's much bigger. As our colleague over here says, the code is the law. It has a very, very different audience. So we do really need to educate regulators that, do not put this directly under the fintech box, create separate regulatory, oversight by creating these sandboxes, watching and overseeing companies as they grow through, so you'll know how to regulate. So I think the problem is for regulators to know how to regulate as opposed to sort of having the regulatory sort of stick. They have the stick, but they don't know where to put it or who to point it at. So I'm hoping that regulators start to wake up. I think there's a lot of discussion in the US, and that is feeding through other regulators. But if they can move fast enough and speedy enough to actually create these sandboxes, that's a question to be asked, because we do know that regulators sort of kind of come a lot after the event as opposed to sort of forward seeing what may occur.
Yeah, I guess kind of agree that the only thing regulators can regulate is the meat space, so they can put the sticker on a person. So before they all did it, that you always had to have a company where you have a director, and you can put the director to jail if things go wrong. But in a protocol, you don't have a director, so you have nobody to put jail. So only thing they can go after in that point is what happens in the real world when people are cashing out and buying food or stuff with their money. So that's the only choke point where you can truly regulate, and anything else you try to do is kind of chasing a cloud.
Yeah, I think that's a fair point. I think we've all got to realise, though, haven't we, that Stanley very well. I mean, it was only 2.5 years ago where we were having supper and he had about $40,000 staked. Now there's 21 billion, and Aave is recognised as one of the leaders, well, the leader, I think probably one of the leaders in the space. And so I'm just referring really to the speed at which this has happened, and it's probably a little unkind and unfair for us to be expectant of the regulators to be able to catch up when we can't even we're moving at such a fast pace, and the innovation is coming so almost on an exponential level. I mean, it's almost impossible to regulate. So I think that one of the things, again, going back to an earlier panel, that seemed to make sense to me was that actually there could be a combined effort, and I think that the idea of university interaction and sort of the academics getting involved in trying to work some sort of formula that works as well could be quite an interesting way of doing it with the regulators. I mean, what do you think of that kind of thought?
Well, the thing is that from an academic point of view, things usually move slowly as well. And that's the problem that regulators have. So by the time an academic finally gets one of his papers, takes a look and decides something, shares it with the team and the regulations, it's out of date, exactly. It's 2021, and they would have probably solved the problem from 2017 in the last bull run. So there's a problem here, it's the speed of the technology. So instead of trying, in my opinion, to regulate or to focus on what's going on right now, we need something like a benchmark, and okay, we're going to go from here, and from there we're going to develop. Because if we're trying to go with what's hot in the market right now, it's just going to be outdated by the time you have it out and it's effective. So I think the approach should be more general. I know this gives room, this it's too much, but you cannot do it the other way around because the speed of this is just too fast for everyone.
So we're at version 1 of DeFi, right? Version 2 of DeFi is DAOs creating, spinning out autonomously their own DeFi protocols or smart contracts that then get funded, where absolutely nobody's in charge. Just it's purely the code and those that trust in the code that, so quite who the regulator is going to go after. So I think a lot of the regulatory communities is in the know. Those who are active in the fintech space have a real deep understanding of this. So they're going at a very different direction, which is let's create the CBDC, let's hand back, if a lot of central banks used to be the regulator, they didn't used to be the FCA, etc. Let's hand back control, a lot of this sort of control of the currency type control back to the central bank and kind of push everything on off-ramp to central CBDC currencies. Then you can regulate at that point. So that becomes the on and off-ramp. Because if you start to try to regulate code that can sit on a satellite, a node in space, it's going to be pretty difficult.
Yeah, and also, like, if you look what decentralized finance tries to achieve, faster, cheaper transfers, everybody I have talked with, they like DeFi, they like to ability to invest, like to transfer, they are like their control. I have actually never met a person who says that, hey, I actually would like to have more regulation for my DeFi investments. So I don't know who are the regulators presenting, what they are protecting, because nobody has been asking for that protection, as far as I know.
Okay, well, we only had a limited amount of time. Is there any last words that anyone wants to particularly get off their chest before we finish? And hand the mic back to Pete, who's looking a bit anxious about timing.
I do have something to say, and I have many friends in contacts that they always ask me, so how is this DeFi thing? How does it work? You cannot read about it, you need to try. So even though it sounds very typical, just give it a try. You don't need to invest much money. Just put $100 there and see how it works, and you will see how big this can be. I think it's important to know what's going to come in the future, and if you're there from the beginning, you have better knowledge of what's coming, and you just need to try. You cannot read about it. So just please go ahead and give it a try.
Yeah. So I completely concur with that. If you're in this audience and you're in crypto and you've not got yourself a MetaMask or the equivalent, you've not deposited something into a DeFi protocol, and you've not done some staking or yielding or compounding, you're pretty much a dinosaur, right? If you're, if you're going to go out and see some of these, younger millennials coming up who only know DeFi, and you claim to know any crypto and you haven't done that, you really are going to be put into a corner, right? So, and it won't be the nicest word said to you. So I would really recommend, before you get to that situation, go get yourself a MetaMask, get active before you claim to know anything about crypto to anybody in this new DeFi generation.
Yeah, I can like saying like it's the agreeing with these guys, but also telling that the writing is on the wall, like the writing is on the wall for this dinosaur, especially the Bitcoin generation. It's like a boomer coin. It's never going to do anything in the world. So I propose that you sell all of your Bitcoin and buy DeFi.
And on that tender note, and also the fact, looking at you, Joey, now, dinosaur and then Dino, DeFi in name only. Anyway, decentralized in name only. Thank you very much, everyone. Thank you for your attention. And Pete, thank you for inviting us all to be with you. Thank you.